before the end of this financial year.
All right, thanks a lot for that. So that's on the momentumizers list. But let's talk about the power sector now. I mean, it's of course ongoing theme. The power minister has said that they have invoked Section 11 of the Electricity Act to meet the expected rise in power demand. We have Harshvardhan Dole, who is the Vice President Institutional Equities at IIFL, who's joining in now to tell us about what this means for the companies as well as what the way forward could look like. Harsh, thanks a lot for joining in. This, of course, seems to be a proactive step to ensure that there's uninterrupted power supply mainly. But what do you see as the impact that this would have on the companies as well as the listed entities that you track?
See, in my opinion, what the government is trying to do is to ensure uninterrupted power during the seasonally very warm, period of the year. Never thus far has government taken such measures. And to that extent, it prompts seriousness from the government, and which is actually a very welcome step. What also has been done is, in addition to imposing Section 11, creating a separate window for trading peak, power, which can be as high as 50 rupees per unit, and that actually bodes well for somebody who's actually having a standard gas-based power plant, who can actually import either a coal or gas and meet that super peak power as and when the states find it prudent. The way we are perceiving, I think for us, power is not a 1 quarter, 2 quarter theme. It's a multi-year theme, which is just at the start of playing off. Power demand is very strong, and there is hardly any incremental capacity in the system. So that places companies like NTPC, to an extent NHPC, Torrent Power, actually in a very sweet spot. Regardless of the run-up in the stocks, we continue to like them.
Okay, all right. Hi, Harsh. Good morning and good to hear your thoughts. So NTPC, NHPC and Torrent Power, we got that. But one stock that's run very, very hard is JSW Energy. I'm just looking at it, in this month, in the last 1 month, it's moved very, very well. And we had the management who told us close to 17-18% of their total sales mix is on merchant basis. So if demand is going to surge up and pricing is going to move up, maybe that could be a potential beneficiary. What's your view on the stock from here on?
So we don't cover JSW Energy, but there is no denying that it's one of the select companies who actually has some merchant portfolio left. And to that extent, it does offer some optionality in terms of uptick in the earnings. But having said that, I'd not be able to comment on the valuations since it's not under stock, which is formally under coverage.
Harsh, let me just ask you a follow-up on your pick, NTPC. Why do you prefer this one over some of the other players if someone's looking to buy a generation company? And how do you look at valuations now, given the fact that even NTPC has moved higher?
Well, NTPC, the reason why we like is threefold. Number one, capacity-based, earnings growth. Each year, the company is set to add at least 6,000 to 7,000 megawatt of capacity, which is a combination of coal as well as renewables. And that should propel its earnings at 12% per annum, assuming that CERC doesn't tweak the benchmark ROE norms in FY25. Secondly, essentially, the capital allocation has improved markedly. They've been doing buybacks, and the payout ratio in general has been very high. There is a scope for that to improve further, but even if it doesn't inch up, the yield is fairly attractive. And third, most importantly, it's trading below 10 times on FY24. Where could you get a company which has got a great governance, solid balance sheet, and yet available at a peg which is less than 1? So the valuation comfort does exist even when the stock has run up 30-35% over the last 12 months.
Sure. Just a very quick question. Apart from NTPC, what would your top stock picks be? And what is your recommendation on IEX that has had a fair share of a fall in the last 1 year? I mean, it's come off from 250 to now, I think, sub 150 levels.
So apart from NTPC, what we like is Torrent Power. And last week, we put out a very strong note on Torrent Power, highlighting 3 things. One, this is one company which is trying to grow by balancing the return ratios, cash flows. And that is all backed by a solid governance. And these days, investors are paying a lot of weightage to the high governance within the sector. And to that extent, Torrent Power stands out fairly well. while the valuations are at a substantial premium to that of NTPC and Power Grid, in our opinion, given the fact that the return ratios are one of the highest in the sector and the leverage is one of the lowest, the valuation premium deservingly should continue. So apart from NTPC, we like Torrent Power the most.
Okay, all right, Harshvardhan. We will leave it on that note, a little short on time because we're running into market opening. But thank you very much for joining us and joining in and explaining some of those calls on power stocks to us. Well, the market is not looking bad at all, by the way. Considering some of the regional markets like the Hong Kong Hang Seng are down over 2%, this is not a bad picture at all if indeed this is how the actual market opening and the rest of the day plays out. Just about a 0.25% lower. Banks, of course, are feeling the heat a little more than the other part is the IT and banks. I think that's where pretty much the focus is going to be on as we get set for the open. We have, of course, our technical experts with us. Let's quickly get the calls in. Sudarshan, 910, what's the stock or index that you'd go with?
Well, L&T is a buy. Keep a stop of 50 points from your